Snipers, you have to see what's happening to the Bitcoin price this Thursday, as I had to get this emergency update out to you guys as traditional markets just closed. And oh boy, do we have a lot to talk about today with our CPI news coming out today, which is the inflation data at 7.5%, which was beyond analyst expectations of 7.3%. We saw not just Bitcoin, but even traditional markets get shaken by this news. And so there are a lot of dynamics that we're going to cover today. And for those that have been tuned into the Cypress channel over the last 2 weeks, none of this has been a surprise. Even what happened today to Ethereum, dumping even beyond Bitcoin, was something we talked about yesterday because we were watching the altcoin charts. And so we have a lot of fundamental news to talk about. We're going to do some technical analysis, make some predictions. So just remember to smash the like button for the YouTube algorithm. If you guys support this content, this is going to be a long most likely. But first and foremost, let's talk about the psychology of what happened today. As soon as the inflation data came out, we saw an initial sell-off. And I'm going to talk about why this typically happens. If we were to just pull up the charts, realize this. When we see news come out, the immediate reaction is typically the real reaction, because that was retail traders telling us that they wanted to sell off based on the news. And so as soon as that news came out, we saw Bitcoin dump below 44,800, and then this is where manipulation comes in, and the whales came in to clear the shorts. I think there were over $10 million in short and long positions liquidated with this move. But for those that have been tuned to the Cypress channel, I told you guys from the start, we need hourly and 4-hour confirmations before we can decide whether or not a level has been broken or not. And we didn't get an hourly or 4-hour confirmation above 44,800. So if you were tuned into the channel, you were good on this move. Now, the other thing that we talked about today, which came true, was what happened to Ethereum dumping. And I was very adamant about mentioning the fact that the Ethereum to Bitcoin chart was not breaking its resistance level, and it was still finding resistance, and that was a potential bearish puzzle piece for altcoins. And that caused the Ethereum to Bitcoin chart to straight up reject this resistance level, and now we are below the weekly open, and that really hurt Ethereum's price. Now we're holding the monthly open, and so as we start our technical analysis, we'll talk about some important levels to watch. But just to bring it up right now, 70,000 Satoshis is a very key level. If we breach below 70,000 Satoshis, 65,000 is on the table. But let's just talk about some news, because first and foremost, right now the NASDAQ is hinting that it is a potential time to be entering into positions, because we are seeing the percent of stocks with MACD buy signals in the NASDAQ with one of the strongest spikes of all time. We haven't seen a spike this large since March of 2020. Now, in March of 2020, we saw a black swan event, and we obviously saw the NASDAQ drop. And so the question is, are we going to be seeing further downside because this is spiking, or is this really a good opportunity to buy? I think a lot of people are on the fence of whether or not this is just a garden variety market correction, or if this could potentially be the start of something a little bit more severe. And of course, that would affect the Bitcoin price, with the NASDAQ being the most correlated index to Bitcoin. And so with that being said, check out this chart here. Others' dominance versus the NASDAQ. Somebody here is saying, quote unquote, altcoins are entering the final stages of an enormous bubble, which I call the blockchain bubble. The dot-com bubble happened 7 years from the launch of the internet. And for altcoins, 7 years from Ethereum launch would be June 2022. The last stage similarities are very clear. Does this hint that we're going to be seeing a potential sideways market for Bitcoin that could bleed out altcoins over the next few months? And why are we seeing Bitcoin come down on inflation news? Well, for those that have been tuned into the Cypress channel for long enough, you know we always like to buy the hype and sell the news. And so could we sit here and say that over the last 2 years that Bitcoin has been in this extremely bullish rally as the Fed started printing money, that we were buying the hype, and now that we're seeing some downside, and it's been a prolonged season of downside, are we going to continue to grind downwards as we start to sell the news? Because last month, 7% inflation data, this month, 7.5%, next month might be 8%. And are we just now finally realizing the news, in which markets are forward looking and they already reacted to that news and now they start coming down? that's something that's on the table, I want to bring up some puzzle pieces to give you guys an idea of this inflation news, because a lot of people are saying that it's super critical that we pay attention. It's the highest increase in 40 years. But realize this, if we go and we look at the interest rates versus inflation chart, we're talking about a potential 0.5% increase in interest rates coming into March. Interest rates in 2019 are at 2.5%. That did nothing to the markets. Markets kept grinding up. Just a 0.5% increase is not going to solve this inflation problem. This transitory vocabulary that's being used is certainly not the case. We've seen even Jerome Powell, with recent Fed minutes being released, stop using the word transitory. And so I know that might be a little bit of, a confusing subject for some of you, but the point is, when we raise interest rates, we don't need to assume that Bitcoin is just going to drop down to nowhere and maybe come down to 10,000, 20,000. I mean, these downside scenarios that some people are putting out there are a little bit extreme. And the point is, Bitcoin is in a new matrix. After breaching 20,000 US dollars, it's reacted to the inflation news with a high of 69,000 US dollars, and JP Morgan saying that at 38,000 it's a fair value, and the projected value of 150,000 in the upcoming months. We cannot sit here and just say that a 0.5% interest rate hike is going to really affect markets that much. And so I want to cover some bullish aspects of the market, and then we'll do some technical analysis. But for those that have been tuning in over the last few days, we did a lot of technical analysis. You all know the range that we're playing in right now is 44,800 and 41,950. We can come down to 40,000, potentially create an inverse head and shoulder pattern and still move to the upside, but below 40,000 would be a major concern. Staying above 41,950 is extremely important right now. The first confirmation that we have weakness is going to be below 43,000, which was our hourly bullish continuation candle that occurred less than 24 hours ago. Now, I do want to talk about some more bullish puzzle pieces, because if this inflation data is really going to affect Bitcoin, does that mean that we're not going to see 50,000 immediate short term? I don't think that's the case. Unless this is the biggest fake out in history. Look at the 21 moving average on the 3-day time frame. Every time we've come above this level, we've been in an extremely bullish trend. Staying below it is bearish. Now we're above it. If we look at this chart, a lot of people are saying this is going to happen to Bitcoin, that we're going to just move back up inside of this channel that we're in. And this is a channel that now everyone is talking about, but we were the first ones to bring it up. I don't think you can find any YouTuber, and if you do, put it in the comments below, that found that channel for Bitcoin with the 64,000, 69,000, and then 29,000, 33,000 support. We were the first ones to address this channel, and now that everyone's talking about it, I don't think that it's going to just move back up to the resistance of the channel. Markets love to do the opposite of what people think it's going to do. And when everyone thought that Bitcoin was going to go below 30,000, I said, nope, that's it. It's off the table. Even Malik in our Discord, shout out to you, Malik, been a member for over 3 years, said, yep, everyone's saying it's going to be 30,000. It's not going to be 30,000. We're going to move back above 40. And that's exactly what happened. Now that everyone's saying that, okay, now Bitcoin can go back up and test new highs, I think that that's not on the table. But look what I found that I think could be on the table. Remember the MACD monthly crossover that we talked about? I saw this post that addressed that, and it talked about this projection of Bitcoin moving sideways over the next few months. And if this is the case, I think this is a more likely scenario as to what could happen right now for Bitcoin. That doesn't mean we're not going to see further upside. It doesn't mean we'll not come to 50,000. But what it does mean is we'll potentially reject the 49,700 CME resistance neckline, or we could have already have rejected the head and shoulder neckline at 44,800, which is on the spot price. And if this happens, we have to be prepared for what altcoins are going to do in reaction to this. And so realize this, if altcoins start to react to the downside, that could be this chart playing out where others' dominance starts to move down. And so the best thing we could do is hedge our positions in Bitcoin, some of the altcoins. I think fundamentally sound coins will do well. Dogecoin, some of these meme coins may not do well. And so how do we play this? Well, realize this, Bitcoin dominance right now, if we were to look at this chart, is inside of an ascending triangle. So it looks like Bitcoin dominance wants to break out. If we see Bitcoin dominance break out, that indicates there's fear in the market. The most likely price action that can precede this is sideways price action. And so at this point, we're in a very critical stage. And I believe that's all the news that I wanted to cover. If there's any more, I will bring it up. But I believe that is it. The last thing I want to say is this: daily on-chain exchange flow gave us a hint today, 11 hours ago, that there were 167,000 dollars in Ethereum coming onto exchanges. Everything else was negative, and that ended up selling Ethereum off. But outside of this, we're just seeing Bitcoin and Tether leave exchanges. One bullish puzzle piece I just want to bring up: August of 2021, we saw Bitcoin sitting around the, let's say, $40,000 level, and that eventually proceeded with a new all-time high, and that was the last time we saw the number of spent outputs with lifespans 2 to 3 years reaching a 1-year high. That was the last time we did that. But anyways, let's just kind of reverse gears here and talk a little bit about what my projections are, what my predictions are, and let's really kind of clear up the stage here after all of what has occurred in the last 12 to 24 hours. So first and foremost, if Bitcoin dominance truly is ready to move up, that's going to show fear in the market. That means that we could potentially see sideways price action. And so what we need to monitor at this point is inside of this range, 41,950 and 44,800. We have this candle low right around 43,000 on the hourly chart. And this was the bullish continuation candle that really stood out to me. And I told you guys this over the last 2 days: if we don't cross below 43,000, I'm not expecting downside. We have yet to cross below this area. As long as we stay above 43,000, the likelihood we can get above 44,800 is still extremely high. We know it's important right now that we get above 44,800, because a confirmation of hourly and 4-hour bullish decisive candles above 44,800 assumes that we're going to see a straight shot to 49,700 to test the neckline of a head and shoulder pattern on the Bitcoin CME charts, while right now we're actually testing the neckline on the spot price. I'm not going to draw it out. I drew it out 3 days ago. And so that's what we need to monitor. We break below 43,000. Here's the bullish scenario. We come down to 40,000, and that's totally fine, because guess what? If we pull the chart to the left-hand side, we have a left shoulder on an inverse head and shoulder pattern that could play out and still bring Bitcoin back to the upside. A lot of this is going to have to do with how traditional markets are going to react over the next few days. Closing the week tomorrow, it has 1 day left. Notice this bullish continuation pattern can still play part, but we break below 40,000, that's when we have to be concerned that now we can start talking about downside scenarios, downside potential. 38,000 becomes the major level if we break below 40,000, because now we're in the range of 41,950 and 38,000. I'm not going to talk about that and go in depth until we're below 41,950, but just realize 43,000 is important. We have confluence here. We have the weekly open, 41,950 and 43,000, all sitting in the same area. So this right here is the most important area for Bitcoin. So we have to hold above this area if we don't want to assume downside. Now, understand this: Ethereum, a more volatile asset, could give us an early confirmation of whether or not we're going to see downside in Bitcoin by breaching below this weekly open sitting at $3,039. We breach below that level, then we have the monthly open and the previous weekly open at 2,600 is our next level of support. At this point, if we don't see continued upside, we're going to potentially breach lower. Now, realize this: institutional time frame on the 6-hour, for the first time, if we look at Bitcoin, we saw a nice push of institutional volume come into Bitcoin, a buy candle, and it took Bitcoin above 45,000. But this to me was manipulation. I'll tell you why. Look, since 34,788, we've seen 3 points of contact where institutions have stepped in. 1, 2, 3. First one was below 34,788. Second one was below 38,000. And the third one was in between 41,950 and 44,800. But here's the problem. On Ethereum to USDT, we also saw institutional buy pressure, but we didn't get 3. We only got 2. 1 in correlation when Bitcoin saw it. 2 in correlation to what Bitcoin saw it. But what happened here? something different. Does this mean that Ethereum was sold off into Bitcoin as a hedge of potential downside or a sideways market? Because this institutional volume that we saw with Bitcoin today, I'm not buying it. And so do I believe that that's a confirmation we're going to see further upside? No. I think that the 6-hour volume was actually a confirmation that altcoins may be in the brink of selling off against Bitcoin when it comes into dominance. That doesn't mean we're going to see crazy amounts of downside. All that means is it slows down a lot of altcoins, right? And so we just have to keep that in mind, and we'll start to see a lot of altcoins hedge into Bitcoin if that's the case. Now, the Ethereum to Bitcoin chart, 70,000 Satoshis, as I mentioned, that's the most important level. I'm not going to go in depth because I feel like that bores a lot of people. People love watching the Ethereum US dollar price. But if we look at this weekly open for the total market cap, 1.911 trillion, another level to watch. So Bitcoin dominance is starting to move up. That's important to watch. If we see continued upside here, that shows that there's fear in the market. Now we have to continue monitoring the altcoins outside of Ethereum. Ethereum to Bitcoin is the leading indicator, the canary in the coal mine for the other altcoins. The same way the Russell 2000 in the stock market is the canary in the coal mine for mid and large caps. Since Russell 2000 is small caps, that could lead prices even lower there. And so what's going on with the DXY? Well, we're staying above the 20-week moving average. We saw an indecision candle today based on the news, but we did come and test this 100-day moving average for a second time. What that tells me is that regardless of the news that we're seeing, because a 0.5% interest rate hike can barely affect markets, it's not really giving the dollar too much fuel. The dollar is still pretty calm, which is a good thing. And so I feel like the dollar being calm means that we might not necessarily need to see crazy amounts of downside here, but the S&P 500 did reject its 100-day moving average. And then guess what? Why are we so adamant about exact numbers to the penny on this channel? What was the candle high here for the S&P 500 on February 2nd? 45.86 for the E-mini futures contract. What was the candle high on the retest? 45.85, $1 off. That means we failed to breach the highs, and then we saw a bearish engulfing. So what does that tell me? Well, do we have a potential A, B, C upside move here? I'm not an Elliott wave master, but I do watch a lot of Elliott wave analysis. Or are we seeing a failure to see further downside here? This is potentially on the table here. We need to monitor the S&P 500. So far, we couldn't breach that high by $1. We're still sandwiched between the 200-day and the 100-day moving average. That's a very important puzzle piece that's on the table. Outside of that, the VIX is something we're going to want to monitor. Are we going to be breaching back above this weekly and monthly open? Because if so, that would be extremely abnormal, as over the last few weeks, we've been monitoring the VIX and we've been fine with it because we knew that we rejected this extremely important level that was tested already 3 to 4 times, depending on where you draw this based on the wicks. And so does this assume another push up? If we see another one of these, that would be extremely bearish. We don't want to see that. Volatility is not good on the VIX when it comes to S&P 500 price action. And so confirmation would be above the monthly and weekly open. So far, we're testing it as a resistance. Do I think we'll break above it? I don't think so. I think that we'll close the week pretty calm. We already saw the news. We already saw the fake out. And with that being said, I know there's a lot that we had to cover today, but those are the most important revolving parts in the market right now. So are we seeing a buy the hype, sell the news on the macro right now, where over the last 2 years, people were buying the hype of inflation and then now they're starting to sell the news? Well, that's certainly on the table. We're going to find that out here very quickly, but just realize this, as I showed you guys with that interest rate charts, just because we see a 0.5% increase in interest rates does not mean we see a capitulation. A capitulation will only occur if we see a black swan event. And until that happens, I'm not going to sit here and say Ukraine and Russia is going to be a black swan event, because that's a white swan event. We know that there's tension in Ukraine and Russia. Yeah, it might affect markets in the medium term, short term, but I don't see a capitulation because of that. And so I do not see anything that would make me too fearful right now. If we have to start assuming some downside targets for Bitcoin, I will continue to dollar cost average positions into Bitcoin and accumulate for the long term. I know we saw that monthly MACD crossover. And that typically what happened in 2018 brought a lot of sideways price action. It did bring some lower price levels from when it initially crossed over. And so could we be saying that maybe we see a $25,000 Bitcoin? Who knows? I don't think that confirmation is going to come until we see any price action below 40,000. And so we're not going to talk about it until that happens. We want to follow the duck, because if it looks like a duck, if it walks like a duck, 8 out of 10 times it's a duck. And so we don't want to sit here and make assumptions. We don't want to go against the trend, because the trend is always our friend. And with that being said, thank you all for tuning in to Sniper's channel today. I'm losing some steam. I'm going to be breaking my fast here really soon at a restaurant all the way up there. I can't wait. And I'll see you guys next time. Remember to smash the like button for the YouTube algorithm if you guys support this content. Turn on those post notifications, hit the bell to never miss an update. The best technical analysis on the internet here on the Snipers channel, youtube.com/snipers. And then if you want to follow me on Instagram, instagram.com/Naeem, just my first name. And until next time, I'll see you guys tomorrow. It's Friday. We're going to have to cover a lot more tomorrow. And just remember this, 44,800, major resistance level for Bitcoin, 41,950, major support level right now for Bitcoin. Until next time, Snipers.